Hi, my name is Darren Joseph from Tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you.
So why do many people incorrectly believe that a corporate director always means that an entity is a managed investment entity?
So where people go wrong is they say if you're a corporate trustee, then you're managed by what is called a managing investment entity. There's two types of investment entities. One is managing, so they do the administration or the trading, and one is managed. Now, if your entity is managed by an FI, a bank, and managing investment entity, then you yourself are an investment entity. So is a corporate director a managing investment entity? No. Okay, because the following. Is the corporate director an entity? Yes. Okay. Next thing. Do they conduct administration of assets primarily as a business? I'm going to assume that they do charge fees, the corporate director. If they don't, somebody else is charging it on their behalf, okay? Maybe the trustee or something like that. So the question is it on behalf of a customer? Yes, but the customer is the company, okay? Not the end user. So now we start getting into the reasons why they're not a managing investment entity. Do they administer financial assets? Like a trustee does, okay? But the corporate director doesn't, because it's the company that administers the assets upon the instruction of the directors, okay? So next question, is it on behalf of others? No, the administration is done by the company on behalf of others. So this would hit not only companies, but any entity that's not a trust, such as foundations. That's why if you use a foundation and you've got a corporate director, it's different. You're not an investment entity. So again, that's something else I would have covered in the next set of questions, is that there is a difference between partnerships and foundations to trusts in the categorization of the entity.
Okay, so we'll cover that later on. Okay, that's fair enough.